listen-only mode.
Welcome to LKCS's monthly marketing webinar series. Thank you for attending this month's webinar on discovering, capturing, and monitoring the loans your financial institution is looking for. My name is John Dudek, and I'm Vice President of Sales at LKCS. So let's begin. Are you losing loans, good loans that you may be trying to get and you're not getting them? You need to be aware that over half of your account holders will be looking for auto, mortgage, HELOC, or credit card loans in the next year. And competition is more fierce every day. Are you prepared? Gain the ability and monitor and close the loans from the accounts that you're looking to close. You want to be able to make the right offer at the right time, and we can help you to do this. You also would like to gain loans from prospects that meet or exceed your qualifications, and we can help you also get the loans that you're looking for. Stop spending time reviewing loan requests that are on your desk that as soon as you look at them you realize they're not going to meet the criteria that your financial institution has. But with us, you can help set these parameters for the new loan leads that you're looking for. LKCS can assist you in winning loans that your management is also looking for. What I have here is basically it's our wheel, we call it our wheel of services, and these are the services that we offer all of our clients. If you start at the bottom, programming and technology, over the last number of years, it's very important to drill down into your account holders and work at getting them information, getting knowledge on them that can help sell your services. And we can help you do that. We can help you with the multi-channel marketing, whether it's print or e-services. One-to-one marketing, more and more of what we do is variable data, where you may be contacting any amount of your clients or prospects, but you can make different offers to them at the same time depending on that criteria. And we help segment and target who you want to market to, and that's what we'll be touching on today, which is the alerting. It's basically credit-based marketing to reach your members and prospects. And we can also help you in the management of the campaigns and the tracking. So these are services that we work with many of our clients. Some of them use all of them, and some of them use some of them, and whatever you need, we can help you with. So what I said earlier, we're talking about credit-based marketing and working with the credit bureaus. What we do is we purchase actual data from all three of the bureaus. We have a relationship that enables us to do this. Not all the bureaus have all the information for everybody that you want to market to. So working with all three is a big advantage. If you use all three bureaus, you can realize up to a 70% increase in the amount of information and the amount of people that are looking for loans that you can reach to. And there's no additional cost for doing this. Here's kind of how we get all this information. There's 180 million consumers out there that we monitor. We use all three bureaus to get information, and there's basically 1,100 data points that we get information from. So besides the bureaus, we get information from the counties, which has to do with mortgages and taxes. We get it from the automotive industry, and we also use the hedonic index to get information on homes and their value. So we utilize all this information in working with our clients to help them get the loans that they're looking for. The data that's available from all three of the bureaus comes into us, and then we select. You have the ability to select the bureau that you may want to have contacted first. You might either use TransUnion, Equifax, or Experian currently, and you can say, okay, I want to monitor this information, but I want to use my bureau of choice first, so you can do that. But the benefit, as I mentioned earlier, from using all three of the bureaus is using one bureau, you can get a certain amount of information on your clients and prospects. Using two gives you the ability to get up to about a 40% increase in the leads. Utilizing all three gives you the ability to have up to 70% more leads than you would get just using the one bureau. Now you may be able to get some of that information from that bureau, but it would take a couple months if whoever they were looking for credit didn't use the bureau that you currently use. And the two products that we're going to discuss today are credit prospecting and credit alerting. And the differences between the two are prospecting, you're using that credit data proactively. You're going out there, finding out who is looking for loans, and you're going after them. You can market to prospects or to your existing account holders when doing this. And credit alerting, you're actually using the credit data reactively. You're monitoring your clients and you're marketing to them, and you can also monitor prospects, and you're looking to see where they're looking for loans elsewhere currently, and you want to stop them from doing that. The nice thing about this is you can specify your lending guidelines. Like I said, are you losing the good loans? You decide what criteria that you want to use to monitor your account base. It can be FICO scores, loan to value, credit history, interest rates. There's many different things you can use to decide who you want to go after. But once you do this, you do have to make firm offers of credit. Credit data can only be used when you're going to extend an offer, and you must be compliant with the Fair Credit Reporting Act, and LKCS can help you in doing this. Firm offers of credit. When using credit bureaus, data marketing material must include certain information, which kind of goes with the Fair Trade Act. You either have to say it's pre-selected, pre-screened, or pre-approved. There's terms and conditions. There's eligibility requirements. Also, there has to be a minimum dollar amount when you make that offer to your clients and to prospects. And also, they have to have the ability to opt out. So the member retention and cross-selling that we talked about, the credit alerting, what you do is monitor that information daily. You get reports daily, and you get to see which of them are looking for a loan, whether it's an auto, whether it's mortgage, HELOC, or credit card. And then you can decide, to make that offer to them. But you get the ability to reach out to these account holders when you know they are out there looking for some type of loan. And all of this is based on actual credit bureau data. And you can also, it gives you the ability to deliver the offer and then to also cross-sell other products. I mean, these may be products that you're currently not dealing with your clients, and now you've got that ability to do that. So here's how it works. When your account holder applies for credit anywhere, an inquiry is posted. So the bureaus know something is up, they're looking for some type of loan. These inquiries are categorized depending on what type of loan they're looking for. Like I stated earlier, it might be a mortgage, it might be auto, installment loan, credit card. Your account holder database is then cross-referenced with these inquiries, and a lead is generated. And so what happens is then you get these leads daily, and it's from all three bureaus that's funneled through us, and you can see what type of product that they're looking for as for the lead. And these are soft hits on their credit. It isn't a hard hit, you monitoring this. And then once that's done, you decide to do the program, then you do respond with the firm offer of credit. You can select which category or what type of inquiries that you wish to target. You can, again, you can decide, okay, maybe I'm only going to go for auto refi right now. My mortgage portfolio is large enough. So, or you can go for, mortgage or all three of them. The leads are pre-screened again, using your criteria. So you are only getting leads that meet the criteria that you're looking for, and then you get the daily alerts. And it is from all three of the bureaus. And as I mentioned earlier, that gives you the ability to have up to 70% more leads or 70% more alerts from your current account base that may be out looking for a loan. And once that's done, we get you those loans, we get you those leads, I should say, and we can help you to market them either by direct mail, email, or we can also give you a list to them and you can contact them by phone. The alerts that we provide, some of the advantages are it helps you to close those loans, which could quite possibly go to your competition. You are alerted as soon as possible that they're out looking, and chances are they weren't contacting you to get these loans. So we help you do that. And you are monitoring them and identifying which types of loans they are daily. The criteria has been set, so possibly if it's an account holder where the credit doesn't really meet your qualifications, they wouldn't be one that would be monitored because of that being already set. And again, we can help you, and you can do a direct mail, email. With some of our current clients, we'll actually put this on their statements or on inserts, letting them know that we can offer, that you can offer these services to them. And I'd mentioned earlier, you can provide outbound calls from these lists, and we do have a number of clients that get the list daily. First thing they do is the next day is get on the phone and contact these people. The second product is the prospecting, and there's again many different ways that you can use the pre-screening and different campaigns that you can utilize. We can be an auto refi, auto loans, mortgages, HELOCs, and credit cards. So you can choose to utilize all these, or you can just pick one or two of the services at a time. And again, you're doing a pre-screen to the existing account holders, and they are meeting the qualifications that you are looking for. Same thing as we talked about earlier with the alerting. You extend an offer to them, and it's pre-approved because of the criteria that you've set, and we can help you, or you can use the service that you're already using to reach these prospects or these members. And we also have a product called DataFlex, which is our reporting engine that can help you measure and follow up and record the results of these campaigns as you do them. The other nice thing is you can leverage the credit data to generate, good quality loans. And what I wanted to do was show you a couple examples of what some of our clients have done, some of the things that you can do, some of the ways you can reach them. And when you decide to do this, you want to be creative and, come up with the criteria that meets exactly what you're looking for. And then as you've done some of these programs, you can always adjust and change either the credit parameters or the guidelines to meet the goals that you have as a financial organization. So here's a couple examples for auto refi. You might want to say, okay, let's do a promotion for people that are leasing vehicles. You can set the criteria at whatever you want. So here we're saying, okay, we only want to contact prospects or clients that have a FICO score of 640 or above. If there's been any lates or repos, we don't want to contact them, and we only want to contact them if there's between 1 and 3 months left on their lease. So then what we would do by using all three of the bureaus, we would take this information and generate that list for you. Here's another example, loan payoff. Again, you might say, okay, I got a certain FICO score that I have to meet. Again, we don't want any lates. We don't want any repos. We only want to market to these people if they have a loan left on their auto loan of $5,000 or more. I mean, it might be $2,500 or $3,000. And we could also say, I only want to contact them if I can save them X amount of dollars monthly on their auto loan. So there's a lot of different things you can do. We've got a number of clients where they have auto loans for their customers, and they'll tell us, okay, once that loan gets down to 24 months or it gets down to $3,000, let's say $3,000 left on the balance, monthly on their statement, we want to have an ad that says, don't forget us for your next car loan. You know, we have great rates and we're there to help you, because as you know, a lot of people don't make it to the end of they don't pay off their car and keep it for a while. They get the itch for a new vehicle and they get out earlier. So you can keep reminding your account holders of this, and, you know, tell them that, you know, show them, market to them that come to us for your next car loan. Here's a couple of examples for mortgage. One of them could be a HELOC, and you could say, okay, you want to be in the first position. Your FICO score has to be 680 or above, and I only want to contact prospects or our account holders that have $150,000 or less on their mortgage and have less than a 50% loan to value and no late payments in the last 12 months. And I mean, there's other criteria you can add to this. It all depends what fits your model of how you want, you know, the loans you want and how you want to market to them. Another one could be a conventional mortgage where, again, you set the FICO score. You only want to contact prospects with a balance of over $100,000, and you don't want anybody that has an FHA, a VA, or a reverse. And the age of their loan might be between 13 and 120 months, or, you know, 13 and 60 months, however you want to set that up. And you want them to have up to a 95% loan to value or better. So here's just a couple ideas of how you use these programs and how they can help you. And then I wanted to show you kind of how you can do it. You know, it could be a direct mail piece. It can be a mortgage, and all these can be variable. They can be personalized. You can put urgency on it when they will expire. You also can have, for instance, if you know if it's a male or female, you could actually have, you know, a male or female for a picture. And then also all this information can change depending on the offer that you're making to this prospect. There just has to be a minimum offer for all of them. And this one we're kind of targeting to first-time home buyers. Here's another campaign, and it can be a personalized letter, or this could be the actual first page of the statement that you send out to your account holders. And this one is for revolving debt, a revolving debt reduction offer. So again, depending on who it is, depending on if you know what their age is or near what their age is, you could change the way it looks. The offer, these will change depending on what offer you're making to this individual. And you can also put a specific loan officer, a specific branch for your financial institution. You can make a lot of different changes on these when you send them out. Or it could be email marketing, and we can help you that way. If you've got the email addresses, we can send this out directly to them, and it basically would look the same as, you know, as the other offers. So there's many different things you can do. And again, you set all the parameters, and each one of these, it can kind of change even per individual that you're marketing to. And this one was targeted for first-time home buyers. You're probably wondering, what are the costs? How does all of that work? So I'll kind of give you the factors that you basically have to deal with when you're doing this. For the credit prospecting, pricing depends on the number of records that you want to purchase, if there's any other demographic information that you want to incorporate in there, and then there's also a credit bureau minimum charge. But to give you an idea, if you're just, you know, looking for records and there's not a lot of demographics, it's about $800 for 3,000 leads. So 3,000 or less leads, you're looking at $800 just for that list. And if there's any after that, it's about 25 cents a lead. And what we can do is offer you a free list of counts and estimates. You may have some kind of program you want to do, an auto refi. We can offer you a free count and let you know if it would make sense for you to do that in that area that you're trying to market to. You give us the criteria. You can tell us, what it might be counties, it might be zip codes, it might be cities. You give us that information, and we can run that to see how many leads you would get that would qualify with all the criteria that you set to do that. The alerting product, that's based on the account holders that you are monitoring daily, and it's being screened, and there's charges once a month for doing the alerting. So the prospecting, as you do a program, you get charged for it. With the alerting, there is a monthly charge because we do monitor the people that you select, your account base, monthly. What we can do here is offer you a free opportunity analysis. What we could do is take your account base, review that base, run it through, and see how many of your account holders have actually looked for some type of loan in the last 30 days, whether it's an auto, a mortgage, or a credit card, and we can let you know, which type of loan it was that they were looking for. So this is something that we can do, free of cost, and it'll give you an idea if it would make sense for you to do this. And like I mentioned earlier, every time we've done this with clients, their account base have been out there looking for some type of loans. You may think you have a good handle on it, but they're definitely out there either looking for a HELOC, a new credit card, a mortgage, or an auto. So we can help you be proactive and look and see who's out there doing that. This was a recent testimonial I just wanted to share with you to show you kind of how this program, how it does work. And they implemented the credit alerting back in February of 2014. And since then, they've recouped about $2.76 million in loans that they felt definitely could have gone elsewhere, and been gone. And they said this value doesn't even take into account the cost of the member taking their other services, their other products somewhere else also, and losing the member totally. So basically what they said is when they get these alerts daily, they treat them as the hottest lead that they have, and they contact them right away. So from what they said, they feel like they averaged closing about 16 loans a month, worth about $250,000 a month in potential loan business that they would have lost if they weren't using this alerting to monitor their account base. So that's all that I have. I appreciate you attending the webinar. If you have any questions, we will open up the mics and answer any questions that you may have. Or if you want, you can contact me. Or if you have a current rep from LKCS, you can contact them for more information, and we can offer you the analysis or run the account for you if you would like to do that. So thank you very much.